Let's go to 17. I'm so sorry about that confusion. I don't know if I was saying 17, but then reading 18. My apologies. Okay. All right. Thank you. Thank you, Etienne. All right. So under the required, it's the same thing. All right. They want us to prepare the cash receipts journal, the cash payments journal, the petty cash journal for the month of October 2018. Use the prepared journals on the following pages. Post to the ledger and prepare the trial balance as at 31 October 2018. All right. Then there it says the following transactions relate to a startup business, JB Stores, a shop trading in household furniture for the month of October 2018. JB Stores is a VAT vendor, okay, and only trades with other VAT vendors. All amounts include VAT at 14%. Okay, guys, wherever you see in the Workpack 14%, I want you to use 15% because all your tests and exercises are on 15%. So I want you to continuously practice at 15%, okay, where applicable, unless otherwise stated. The perpetual inventory system is in use, and all inventory is marked up at 50% on cost. Already, somewhere in your piece of paper or on your exercise book, if you have one, you're writing, you're doing your model. Okay? You're doing your model. Okay? So you're writing, well, I know profit is 50%, so because my markup is 50%. And I know it's on cost, so cost is 100%. And then I know my selling price is therefore 150. Okay, we've done that. Then the last key thing that they make us aware of is they say all monies received is deposited on the following days only, the 11th and 26th. Okay, so it's very important to also note that down, because what they are communicating to us in essence is that money is being deposited only on the 11th and 26th, all right, in the bank account. All other days, money is not entering the bank account, okay? So the next step then is to read each of those transactions and then write down on the side which transaction belongs in which journal. Okay, so I'm just going to do an example here quickly, but I need you guys to be doing this. Okay, so for the first transaction on the first, it says the owner, Joe Black, issued a personal check for 200,000 as capital contribution issued. Issued receipt RC01. So which journal should this go in? Remember we said we have 3 journals that we are catering to. The cash receipts journal, and that journal is what we use whenever we receive money or receive cash, okay, or receive a check or an EFT. And then we have the cash payments journal, whenever we're losing money, paying money, all right, money is leaving the business. And then we have the petty cash journal, all right. So which journal of the 3 should this transaction go to? All right, if it's the cash receipts journal, please just put CRJ in the chat. If it's the cash payments journal, please put CPJ. And if it's the petty cash, just put PJ. Which journal should this capital contribution be recorded in? All right, yes, 100% Etienne, 100% Mohalo. All right. This is the cash receipts journal or the cash book receipts. All right, so I want you to write on your piece of paper CRJ, okay, or CBR, okay, right. Then we go to the 5th, okay. You'll see why I'm saying that you should do this. On the 5th, it says purchased furniture from Woody Furniture for resale purposes and paid 349,000 per check number 01. Okay. So here, remember, this is a furniture business. Okay. Remember, they told us a shop trading in household furniture. So here we're purchasing inventory. Okay, so which journal should we put this in? Somebody tell me, which journal should this be entered into? Thank you very much, Etienne. It is the cash book payments, all right, or the cash payments journal. All right, right, cool. Then we go to the next transaction, okay, and there we are on the 11th, okay, and on the 11th there are, sorry, not the 11th, the 7th. Why did I go all the way to the 11th? The 7th. It says cash the business check number 2 for petty cash. Okay. Since we cashed a check, that means it's money leaving the business, and this money was leaving for the petty cash. All right. So this is going to go from the cash book payments, all right, or cash payments journal. Okay. Then on the 9th, okay, on the 9th, we bought stationery for the office and paid from the petty cash journal. All right, so this is going to come out of the petty cash journal. Okay, I think somebody raised a hand. Did somebody raise a hand? Okay, all right, I'm not sure where that sound came from, but that's fine. If you guys want to say something, feel free. You can just obviously, put on your mic and share. On the 11th, we had cash sales as per the cash register roll, 17,695, including VAT. Okay, so this is cash sales, so we're receiving money. So this is the cash receipts journal. Okay, on the 17th, we paid for fuel, all right, from Tim Garage with check number 3, all right, paid for fuel. So this is the cash payment journal. Okay, I don't know why my thing is not writing, my PC is not writing. Okay. All right. Okay, but let's go on to the next transaction. I'm sure you guys now get the point. Okay, now it's writing. So let's just quickly jot that down. That's the cash payments journal. Okay, then on the 24th, it says received 250,000 from XYZ Bank in the form of a loan. The money was transferred directly into the bank account of JB Traders. Okay, so again, we are receiving money. Okay, so on the 24th, it's going to be the cash receipts journal. Okay, then on the 25th, okay, we purchased a second-hand vehicle to use as a delivery vehicle, paid 145,000 by check number 04. Okay, so this is going to be the cash payments journal. Okay, and then finally on the 26th, we had goods sold for cash, 33,000 excluding VAT, as per the cash register roll. Okay, so we had cash sales, that means we're receiving, so that should then be the cash receipts journal. And then on the 30th, the owner took 300 from petty cash, 155 of this was used to purchase refreshments for the staff. The owner took the remaining amount for personal use. Okay, so this is going to be the petty cash journal. Okay, all right, so now we know each transaction and where it's supposed to go. The next thing is now to start putting these in the journals. Okay, so what we then need to do is to say, okay, which transactions did we say belong to the cash receipts journal? All right, can you see here on the 1st on the 1st, on the 11th, on the 24th, and on the 26th. Okay, all those transactions belong to the cash receipt. So can you see, that's why we read through every transaction, so that when we now need to deal with any journal, we know that we can begin and finish that journal before moving on to the next and the next and the next and the next. Okay, right. So let's quickly get into this one. So on the 1st, what happened? We had 200,000 that came in from the owner. Okay, so that 200,000, remember, he issued a check. So analysis of receipts. This, we just put analysis here, but the full thing is of receipts. Okay, analysis of receipts is what goes into your till. This is the register, the till register in the business. Okay, now obviously, because he wrote us a check, all right, the money obviously never went into the actual till, all right, it went straight into the bank. So we put that 200,000 there. Okay, there's no VAT, on the on capital, so we go straight to sundry, because we know the other account that's affected by this is then the capital account. Remember, in our lessons with unit 1 and 2, we learned that there's two accounts, at least two accounts are affected by every transaction. Bank has been affected, and now capital has been affected. But can you see, capital doesn't have a column of its own. So we have to place that amount under sundry, and then under details we put capital. Okay, right. Then we move on. Next transaction we had for the cash receipts happened on the 11th, and on the 11th we had cash sales of 17,000. Okay, actually we're going to start here. 17,000. This money went into our till because it was cash sales. It obviously happened on our premises. 695. Okay. So can you see, this is the price inclusive of VAT. Okay, it's the price inclusive of VAT. So here also 695. Okay. Then we know that this was sales. So sales is going to be affected. But here's the thing. Here we can't use the VAT inclusive amount, because remember, when we look at our revenue, we want only the portion that belongs to us, not the portion that is belonging to SARS. So we then say to ourselves, of this 17,695, how much of it belongs to us? In other words, what is the VAT exclusive amount? So we say, what do we want? We want the VAT exclusive. Remember, we said to ourselves that, let me quickly write this out for you guys. This is more just a bit of a recap. We said the VAT amount is 15. VAT exclusive is 100. The VAT inclusive is 115. All right. So again, what do we want? What we want is the exclusive amount. What we have is the VAT inclusive amount. All right. So this now then is your, okay. I know why it's doing that. Doesn't want any spaces. Okay, so there now you have your VAT exclusive amount. Okay, so then under sales, we're going to put this 15,386.95. Okay, right. I'm going to round it off to 2 decimal place, so this will be 96. Now that we have that, we also now need to calculate the VAT amount. So what we can then do there is say 17,695. You get the VAT amount times 15, because what we want now is the VAT amount. What we have though is the VAT inclusive, and there we have our VAT amount, which is 2,000 something, 2,308.04 cents. Okay. Done. Now, remember, with every sale, we also need to calculate cost of sales. Okay, so that's exactly what we're going to do. We're then going to say, okay, cost of sales, we work it out off of the selling price. Remember what we said our model over here? I'm doing it in red just to show you. Remember, that's our model. So then we say, okay, cool. What we want is cost. So 100. What we have though is the selling price, 150. Okay, times what we have rand amount, which is the selling price rand amount, 15,386.9565. What do we get? Okay, we get this 10,257.97. Okay, then we've recorded our first sale. Okay, then we can go on to the next one. The next transaction that affected the cash receipts journal, okay, was on the 24th, and we received 250,000, all right, from the bank. All right, it was a loan. So obviously this went straight into our bank account. Okay, they didn't go and put it in our till, all right, and then we then deposited in the bank. No, they transferred it straight to our bank account. So under bank we put 250, nothing under analysis of receipts. Then we go to sundry because bank loan doesn't have a column of its own. Obviously there's no VAT on a bank loan, so we plug in the whole 250 under sundry. Okay, and there we go, we've recorded that. Okay, then the last transaction that affected the cash receipts journal, and I'm going to give you guys a break now. Just want to finish this last transaction with you. Happened on the 26th. Okay, and there, goods sold for cash 33 excluding VAT as per the cash register roll. Okay, so here we sold goods excluding VAT, but we know that we charge the client the amount inclusive of VAT. Okay, so then what we have to say is, okay, cool, in our analysis of receipts and in our bank column, it's going to be the amount inclusive of VAT. So we want the inclusive of that amount, right, which we know is 150. So we're then going to say, okay, this exclusive of that amount times 115, what we want, divided by what we have. What we have is the exclusive, which is 100. You get now the VAT inclusive amount, selling price inclusive of VAT, is at 37,950. Okay, and the bank, remember, because they said we deposited on the 26th and on the 11th. That's why we have amounts there in the bank. Okay, so we're gonna put this 37,950 over there. Then we know that the VAT exclusive amount is the 33,000, so we don't need to calculate that. Okay, but then we obviously need to calculate VAT. So another thing that we could quickly do is simply say, okay, let me do it like this, just in the interest of time. All right, minus 33,000. Okay, and you get 4,950. Okay, 4,950. Okay, right. Then last thing that we need to do is obviously calculate the cost of sales. Again, they didn't tell us that the cost of sales has changed. So again, we'll be using the same model, okay? Same model to calculate cost, okay? So what do we say? We say what we want is 100. What do we have though? It's 150. Okay, then times 33,000. Okay, and we get 22,000. Okay. All right, awesome stuff. All right, and then these are the totals. Let me do this. Okay, there you go. All right. So that is your cash receipts journal. All right. But let's take a 10-minute break, and then when we get back together, we'll do the cash payments journal and the cash and the petty cash. Okay. Are there any questions or thoughts? For now, let's leave folio alone. We will deal with it at a later stage. Yes, no problem. I'll do that. I'll do that, Etienne. Okay. So Arya, just for now, let's leave that just for now, and then we'll deal with it at a later stage. Okay. All right, guys. Otherwise, let's take our break. I'll turn back just now, Etienne.